Hi everybody, this is Osprey from MyChartCoach.com. In this video, we're going to take a look at some of the stocks that are currently in play. Let's take a look at Box here. They reported earnings last week. Okay, earnings went well. They raised their full-year guidance, and the share price responded favorably. It ended up holding that middle Bollinger Band. Yeah, if we look here on the daily chart, you can see here that it's in the 50 to 70 bull zone. At 54, there's plenty of room to run until that 70 overbought level. It is hitting 93 here in Fasto. That's a level that it topped out at back in early November, and yeah, it has to stay now in that 80, above 80 bull zone. Okay, so the bullish development was the close here above the descending resistance line. You could see it had stalled out at that level in the beginning of November, failed to break that level and pulled back, and so the close above signals more upside potential. It needs to stay above the red descending resistance line at 1850. If that level can hold, the green line is the next level to break. That's the 50-day simple moving average at 1928. That's also lined up with the closing price in the 7th. If it can break above both those levels, the 20 resistance zone from the closing price in the 16th will be on deck, and then this descending resistance line here at 2050. So it's all about breaking 1930, 20, and 2050 to head higher, and then it has to stay above the middle Bollinger Band, the dotted purple line here at 1788, to keep this new uptrend going. If it were to drop below that level, that would signal downside risk and consolidation. Now, on Thursday, there was this long upper wick on the long lower wick on this candle, signaling that people were loading off of the 17 support zone. Check out the giant volume bar, and that did signal more upside potential. So that was nice to see bullish follow through on Friday. Now it just needs to hold support and break resistance to keep this new uptrend going. Okay, let's look at AXL. Had some heavy call buying on Friday, and so the chart is heating up. If you look here, it closed above the middle Bollinger Band, the dotted purple line, on Wednesday of last week, and then it was able to close above that level on Thursday and Friday as well. So as long as that level holds at 1202, a new uptrend could begin. If it were to drop below that level, that would signal downside risk. You can see it's in this sideways channel here. It's going to need to break above the top of the channel. So the closing price here on the 28th, the closing price here on the 16th, and then the closing price here on the 7th. These are the three big levels to break. If it can get above this upper Bollinger Band here at 1284, bust through this 13 resistance zone, it could possibly run up to the bottom of this gap. There's a gap over here between low of day on this candle and high of day on this candle, and so a run up to 1415 about would send it to the bottom of the gap resistance level. So it's all about holding that 12 support zone and then breaking through 1250 and 13 to make a run up there into the 14. So keep an eye on AXL next week. Check out AUPH. They inked an agreement here with Jefferies for an at-the-market sell of up to 30 million of its common stock. So it had been pushing here. It was on a 3-day run. It closed above the upper Bollinger Band there at 593. As long as EMA4 at 580 is holding the pink line, the chart is super strong and it signals more upside potential. It's just going to need to bust through this resistance level. It did close above the high close from back here in June on the 20th of June, so that does signal more upside potential. It just has to stay above 6 now. Keep pushing above, and then what you're looking for is it working its way back up to 665. Filling the jar back up to that level. You can see it form this double bottom. It looks like a W type double bottom pattern, and then now it's pushing higher. So it's all about holding resistance to make a run up to that 665 level. Okay, let's take a look at IPCI here. There's this basically 10% passive stake in this company by Empery Asset Management. Not sure who that is, but yeah, they're loading, and you can see that on the chart here. Check out the big volume down here. So huge volume bars down here at the bottom of the chart. It didn't form a hammer down here, but it's a hammer type of candle. It did close above the open. What you're looking for next week for IPCI is a break above EMA4 at 36. If it breaks that level, it could run up here to the middle Bollinger Band at 48. You can see it closed above that level 2 weeks ago, but that level failed to hold and it pulled back. And so you're looking for 48 to turn into support for a new uptrend to begin. So yeah, with the big stake in this company, let's see if they'll try to push it higher next week. So keep an eye on it. It has to break above EMA4 to be in play for, dead cat bounce type play here. If it fails to break EMA 4 and candles keep riding that level lower, it's going to signal more downside risk. What makes the play interesting is the big volume down here. There's heavy volume, and so with this 10% stake in the company, are they loading down here? Obviously, and yeah, that makes it interesting for a possible push higher. So keep an eye on it. It has to break above 36 next week though to be in play. It will be a risk to hold if it closes below EMA 4 on the daily chart. All right, thanks for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out the chat. All right, thank you.